Boom! We are live. Happy Friday, everyone. Welcome back to another episode of Benzinga Live. It is a happy Friday indeed, in part because there's actually green out there on the heat map today for one of the first days, it seems like, in weeks. I know that's not really true. We had some green days last week, but throughout this week, it's been mostly red. So it's good to see some green on the board today. We will talk about that. We will talk about why stocks are rallying today. In addition to some of the kind of biggest trades we're seeing out there today. Today also is the July options expiration. So definitely some extra volatility from that. But let's go ahead, roll that intro, get the show started, and we'll go through the agenda for today when we get back.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. All right, guys, so let me go ahead and get my Benzinga Pro pulled up. If you're confused as to why the market is up today, you think there's a lot of negative news and kind of bearish energy out there, I understand. I'm here to help you understand kind of today's price action, today's price movement. So essentially today, this week, we started off our earnings season for July. Over the next few weeks, we'll continue to get more and more big earnings. Next Wednesday is Tesla, which will be big. And then the following week, we will get Apple, Microsoft, you name it, pretty much everyone reporting earnings. What are we doing here? What is this? But pretty much everyone will be reporting earnings over the next couple weeks. Let me go ahead and get my Benzinga Pro pulled up, even though as great of a shot as this is great. Just great YouTube in general. There we go. Now we got our camera fixed. All right, guys. So let's start by just taking a look at the different indices, the overall market. Your S&P 500, wow, pumping up 1.67%. Taking a look at the 5-minute chart here, you can see we are now at highs of the day. We had our pre-market highs, or actually these are highs back on July 13th. So trying to take out these highs from a couple days ago. We'll see if we can on the SPYs there, but definitely pumping there. Q's up 1.49%. And then we'll go to the Dow Industrial Average is up about 2%. So all around, pretty strong movement across the board. But like I mentioned, we started earnings this week. We started with, your JP Morgan, and they didn't do well. You can see this big move down here. Let's go to some daily candles. So you can see JP Morgan had this big move down yesterday, up today, up 3%. Why? Well, because Wells Fargo, which is up 7%. Wow, what a day from Wells Fargo, and Citibank up 10%. Both reported pretty good earnings. And if we zoom out on this daily chart, you can see that the bar was kind of low for Citi. We've just been in this downtrend. We hit highs of Citi at around $80 back in June of last year. And since then have just been on a straight downturn. And today, up 10%. So the market was looking at the wide landscape saying, okay, things aren't very good right now. Everything's selling off. But then you had these financials come around and kind of save the day today where the numbers were better than expected. Let's go into our Benzinga Pro. Let's go into our news feed and dig a little bit more into some of those numbers. But essentially, so here we go. So Citi reports an EPS of 2.19, beating this 1.69 estimate. So actually absolutely crushed it by about 50 cents on the EPS. Sales beat by more than $1 billion. So overall, very strong quarter for Citigroup. Pretty much the same thing for Wells Fargo, which is really interesting as to why JP Morgan's earnings were so poor compared to Wells Fargo's and Citigroup. Wells Fargo EPS, I guess, missed, but revenue. Oh, no, I guess Wells Fargo missed both, but Citi did really well. And then your retail numbers this morning were higher than expected as well. So that was your other big kind of headline of this morning, why stocks are moving higher. So let me get these retail numbers pulled up. Basically, so June retail sales came in ahead of expectations on Friday, rising 1% on a monthly basis, ahead of Dow Jones' estimate of 0.9%, indicating that consumers are bolstering retail spending even as inflation hits record highs. So that's basically what we've been hearing from different executives from different companies, whether it's Walmart, whether it's Target, that they're still seeing a resilient consumer. Just that consumer mix is changing, so people are buying different things, which has caused some problem for some of those big box retailers. As you know, a big part of their business is managing that inventory, and now the inventory is shifting around. So certainly still some trying times ahead for Target, for Walmart, for some of your big box resellers, but you know, a little good news coming out today never hurt anyone. Let's go back to just the indices, see if we can kind of make some new highs on the day for the S&P 500 for the Qs. Oh yeah, there we go, baby. There we go. 5-minute chart here. Yeah. So we're still pushing. Looks like we might have this little, oh, there we go. We're looking at 5-minute candles here. So I'm just trying to see if we can get past this previous high. And if we do, then I think we've got a little bit of room to run. And I mean, it's interesting seeing these rallies on Fridays because you really start seeing people pile in, especially as the afternoon goes on, because there's not a lot of more news to come out. So you really just have price action dominating kind of the sentiment. And while the markets are doing well on a Friday, you have more people wanting to get in and say, I don't want to miss out on these gains. You know, maybe I've been sitting on more cash recently because the markets have been weak, but now we're rallying and I want to get in. So it causes this kind of FOMO buying, and people really to come in and start buying. So I wouldn't be surprised to see us keep rallying, kind of having a strong rally into the close today. I'm not really playing it. I had some calls on the Qs actually going into today that I made some money on, so I sold those. And now I don't really have many open positions just because I've been I'll be busy pretty much for the rest of the day, so won't be able to manage those positions. But let me know in the chat if you guys have stocks or trades that you are watching today. Be very interesting. And then let's see some other big headlines of the day from outside of the finance world. You have the British Open going on right now. So kind of we're getting into this quiet time for sports where you know, you have NBA Summer League, but outside of that, no basketball. You don't have any football. You know, you've got baseball, but that can be kind of boring for a lot of people. We do have the All-Star Game and Home Run Derby coming up. All right, Slick Rick is looking at Neo. Let's check out Neo. Neo down today on a day where other tech is doing well, so that's interesting. Down about 3.5%. I think all of China is getting beat up again today. Yeah, look at Baba down more than 3%. So it looks like China is just trading off today. We've talked about China a lot, the China trade a lot on this show recently. But basically, there's just a lot of risks there that are still scaring off a lot of investors. I actually do think there's a lot of there's a lot of upside here, both on Neo, Baba, some of these other Chinese names that are still well off their highs. It's just all this cumulative risk built out there from different risk factors in the macro outlook for China. So it's getting really tough. Yeah, in the chat, Night for Humanity, China getting hate, zero COVID will be China's downfall. Yeah, and I mean, that's the thing is right now, so China still has this zero COVID policy where they're saying anytime we see an uptick in cases, we're essentially going to shut down the whole economy, shut down Shanghai, shut down Beijing. And that's really been wreaking havoc on a lot of these stocks and a lot of the returns. Slick Rick saying he's scalping Neo. So even with these stocks and downtrends and having a lot of fear around there, you can definitely still make some money scalping them. And like even we've got Baba's chart pulled up right here, but pretty similar to Neo's. You can see at one point we were down like more than 5% today and have came back a decent amount. So even when there's weakness out there, you can still get those little pops. So just something to watch for on Neo, watch for on Baba and some of these other Chinese names. Actually, one of the Chinese names I've been looking at the most recently has been Boyd, BYD, which is Warren Buffett's EV company. Let's see, catching up on the chat. Zane Perez is saying stocks rising as monthly options expire, shorts covering. Get ready for a bloodbath next week as they load up. Yeah, I mean, and that's why today, we did talk about today being that options expiration. So you usually just see a little bit more volatility. And a lot of times what you'll see is that initial price move off the open will then determine what kind of probability or volatility we see throughout the rest of the day. So for example, take today, because we opened higher, what's that going to do to all these people that have puts and whatnot expiring today? They're going to cover, and that causes the market to jump up even higher. So um, certainly that options expiration playing a role in the price movement today. I still think it's more due to those positive kind of bank earnings from Citigroup, from Wells Fargo, and also that beat on retail numbers, just showing that the economy may be a little bit stronger out there than some people are giving it credit for. We also got last night China's GDP came in well below expectations, which I thought maybe was going to mean we were going to have a bad day all day today, because China's GDP's numbers were really poor. I believe China's economy grew 0.4% over the quarter when they were expecting like 2%. So a big miss there. But overall, just yeah, good price movement today in pretty much everything. It's good to see, because if you're like me and you've been looking at your portfolio just down pretty much every single day recently, it's good to see a nice little green day. We'll see if that action continues into next week. To your point, Zane, and I don't know if it has anything to do with shorts covering today, then needing to load back up next week. But I am expecting a little downturn next week, and potentially the week after, just as we get some of these earnings reports from some of the biggest companies. And I don't, I'm not really anticipating a lot of, Netflix-esque or Facebook-esque earnings reports where you really see the stock come down, 20%, whatever. But what I think is more likely is just seeing Apple, Tesla, all the biggest companies just give a little bit weaker quarters than they have in the past. Here, let's pull up a weekly chart here on Facebook or on Meta, and you can really see. So yeah, I mean, like, this is that earnings report I'm talking about. 1 week down 21%. And then you actually, I think, had two really bad earnings reports from Facebook in consecutive quarters. But I'm not anticipating seeing any big moves like this, especially particularly in the big names, in your Apples and your Teslas. We would be in pretty big trouble if something like an Apple, with how big Apple is weighted in the S&P 500 and in the Qs, if we did get one of those big. But it wouldn't surprise me to see Apple give maybe, not so great of a quarter, see it drop maybe around that 130 level. And then I'm a buyer down there, honestly. Like, and let's pull up Netflix's chart, because you can really see it here. I mean, two earnings reports in a row for Netflix just got the smackdown. We were trading at $700 at the end of last year, and then now Netflix is down to 180. You can see this one down 24%. This next earnings report down 36%. So I think a lot of those are honestly kind of past us, where now the bar and the expectations has been set for Netflix, that okay, the crazy growth quarters before COVID and during COVID, maybe we're not going to see any of those anymore. So you have you have these earnings coming up. So conference call or Q2 earnings in 4 days from now, July 19th. Apple's and Microsoft's will be a little bit later. I believe Apple's is the next week. Yep, the 28th. Tesla's is the 20th. So I do think, Zane, next week we could see some more pain next week. That doesn't mean I'm going out and buying puts and trying to play short. No, I'm actually doing the opposite, where I do want to play them long, just maybe after that earnings report. Give them a few days to digest. If someone like Tesla or Apple reports a not so great report, give them a couple days to digest, figure out where the market wants to price that stock, and then potentially get in on the long side after that. All right, so we had Slick Rick scalping Neo. Any other stocks people are out there watching today? Let's go ahead and take a look at those. It is Friday, so we can have a little bit of a fun show today. Maybe we'll do some interactive challenges, maybe a free swag giveaway for a guess that chart segment or something along those lines. We shall figure it out. Slick Rick is also looking at FCX. Come on, guys. Is Slick Rick the only one trading out there today? I know Slick Rick is not the only one trading out there today, looking at stocks, looking at different equities. Let's see, FCX. I'm not really familiar with this one, to be honest. Freeport McMoran. Freeport McMoran. All right, let's go to the overview. Got to see what this company does. McMoran is an international mining company that operates geographically diverse assets with proven and probable mineral resources of copper, gold, and molybdenum. All right, guys, what the fuck is this? What is molybdenum? Can someone tell me what molybdenum is? Molybdenum. But this is one of the best parts about Benzinga Pro. I pull up a stock that I've never heard of, a company I'm not familiar with. I can come down here, right to the overview, figure out exactly what it does. In addition to figuring out what it does, just seeing kind of all the different, important fundamentals, right? If you want to look at its PE, you want to look at its price to sales, you want to look at its EV to EBITDA, it's all right here, right at your fingertips. So when I'm looking at this, I see a pretty low PE, pretty low price of sales. So it's cheap, but it's a miner, and miners are typically pretty cheap. So you can see, compared to its peers, your Vale, your Rio Tinto, actually a little bit of a higher PE here. Slick Rick saying doesn't matter what molybdenum is or whatever that is. So he's saying just buy it. But Slick Rick, are you buying this as like a swing trade, an investment, a scalp? I know you were scalping Neo. Let's pull up a daily chart here just to give myself a little better of an idea of where we stand. So yeah, I mean, it looks like pre-COVID, we were trading at $13. So we're still well above our pre-COVID levels. Not necessarily a bad thing. We've come well off our highs, $53 down to 25 in the span of about, 3 months. I mean, this was April 2022. So this is, 3 months ago. We've given up more than 50% of the gains. But I don't know. I mean, from a chart perspective, it does look like we're at this spot now where we're coming back to this previous support kind of down here. And if you were trying to play that support, I don't hate that because you have a very defined out. You can say, okay, if we dip below here, call it $24 flat, I'm out. So you could buy it here at $25.77 and put a stop loss in there at 24 and say, yeah, I'm going to try to play for a bounce here. And then I have my defined out, which is this support going back to December 2020. Because then if we drop here, you've got another, $4 to go, which is at this point in the $20 stock is 20%. So that if it were me, that's how I'd play it. Looking at the chart, it does look like it's been kind of an ugly downtrend over the past 3 months or so. And that's where we come in. We always say the trend is your friend. You don't want to come in and try to buy any falling knives. If you try to catch a falling knife, chances are you're going to get stuck with a bloody hand. So, just watching this one right now. But yeah, that's essentially how I would play it. Let's check back in on the indices. So I do have, so every like 5 days on my Robinhood, I get reset on the amount of day trades I'm able to make. So now I can, I actually have a couple day trades to make. So if I wanted to make like a little trade today that I can get in and out of real quick, I can do that today. Let's go through some more top headlines of the day. So you do have the Dow just being very strong today, even compared to energy. Usually if we're having a green day, tech is up the most, but that's not the case today. You can see the Qs are up 1.65%, whereas the Dow's up more than 2%. So a super strong day for the Dow. Let's see what's kind of playing into that. It's not really energy. The XLE is only up 1%. It's going to be your financials. It's going to be because, your Citigroup, your Wells Fargo are up, 6, 5, 7%. XLF is up more than 3% right now. So one of the best days I've seen for the XLF in a while. Shout out Aaron Bryan in the chat. Got to meet Aaron in Vegas. Great dude. He's trading some energy names. It looks like BHP or no, wait. Sorry. I thought BHP was BP. No. Okay. I know SCO. That's Southern Copper Mining. That's a mining play. CPR. Rio Tinto. So it looks like Aaron's playing some of the mining plays as well. Copper plays in general. Is there any news on the copper, Aaron Bryan, that you're looking at while you're playing this? I did. So I talk about Odd Lots, the Bloomberg podcast, a lot on this show because I listen to that. One of my main kind of finance media things that I intake, and they had an episode recently on copper and just why copper has a potential to be like one of the biggest plays over the next 10 years, just because copper is so prevalent in like not only electric vehicle batteries, but all types of new electronic batteries and appliances, and not to mention what you need copper for other industrial building as well. So I could get talked into some copper plays. I just want to know the thesis. Like, are we swinging them? Are we investing in them? Are we day trading them? Um, Advanced auto parts here. Dustin is looking at advanced auto parts is pretty interesting. Just because with what's going on in the okay, Aaron Bryan saying copper's down 24. Yeah, but we're seeing a bunch of commodities just get crushed across the board. And part of that could be, showing that inflation is finally starting to slow down. I'm not really sure. We're gonna wait and to make any predictions about inflation or anything slowing down, because nothing we've seen uh really, I mean, outside of gas price. Let's do that. Let's do that. Let's do another check in on our gas prices, because basically my point in checking this every day is I want to just keep seeing if the Matt McComb is saying copper is down because demand is down. Home builders canceling. Stay away from copper for now. Yeah, I kind of agree with just looking at like the price action of Southern copper and whatnot over the past. It seems like it's in a pretty defined downtrend. Okay, so the reason I want to keep checking this every day is because I just want to see if the trend is going is going to continue, where it seems like every day the gas prices are just dropping by like 3 cents a day, and it does seem like yesterday's average was 460, today 457. So as long as we keep seeing this trend, and again, this is the reason I'm checking this every day, because that's going to be more and more conviction to me, okay, that inflation is really coming down from its peak. I'm not saying it's still not going to be high. Of course, it's still going to be super high. But if gas prices keep coming down, that's going to mean that more consumers have more money to spend each week or each 2 weeks when they get paid, because that's less money having to go at the pump. I mean, think about it. I mean, from $5 to 457, that's 43 cents a gallon, right? Say you fill up 10 gallons a week. Now you got an extra, $5 to spend somewhere else. You multiply that by the millions of people across the country. That's a lot of money going back into the economy. But if this reverses and we start seeing gas prices go up again, then it's like, okay, maybe inflation isn't coming down. Maybe it's just some fluctuations in the oil and gas market. But for right now, if we keep seeing, every single day these gas prices coming down, I'm going to see that as a bullish sign for the market. It'd be hard not to, unless your thesis is, okay, the only reason gas and oil is coming down, like Matt McComb is saying for copper, is because demand is going down and that a recession is coming. But I think there's just a lot of conflicting data out there. I mean, even take, for example, today, retail shopping grew. If retail shopping grows and we add jobs on a month over month basis, so people spent more money in June than they spent in May, we added more jobs in June than we had in May, that doesn't match the narrative of a big recession coming, right? I get that we have bad inflation and we need to tackle that, and we can handle limiting some growth to tackle that inflation. But if you're telling me we've got this huge '08, '07 recession coming, '08, '07, '08 recession coming, yet we're adding jobs and retail spending's increasing, that doesn't really compute with me. So I need to see some more data to really show that, okay, we're heading to this huge recession. So if I'm not convicted we're heading to this huge recession and you see oil and gas coming down, that's telling me, okay, it's not because we're heading to a recession that oil and gas is coming down. We're heading, or oil and gas is coming down because inflation might be coming down, which can be a very good sign. So we'll see. Again, I mean, I'm not saying I'm the most bullish person out there right now in the market, because I think, you got to be able to compartmentalize and realize that the market and the economy are two different things. And while I think the economy is doing pretty well right now, the stock market is obviously not doing pretty well right now. So, I think, and next week when we get these earnings coming out, and I do expect the S&P 500, your Qs, to drop a little bit more as we get some of these disappointing earnings coming out. But I don't think that means that the economy is in any overall damage or V Viral video saying Benzinga, that's weird. We added jobs where I live in Phoenix. Several major corporations halted and instantly did huge Yeah, I mean, trust me, there are a lot of layoffs happening right now, and I've talked about this openly and a lot on the show. And if you look at a lot of the layoffs, they're happening in these high growth areas, right? You're in your semiconductor space, in your social media space, right? You have like places like Carvana, Facebook, Netflix, even Tesla laying people off. But if you look at companies like UPS, FedEx, Walmart, more your companies that are like going into your day to day function of the economy, they're actually hiring right now. And I mean, it's not just like I'm not just saying, oh, some companies are hiring, some companies are halting hiring. We net added jobs in June. That jobs report that came out last Friday, the expectation was that it was going to be a disappointing jobs report. It actually ended up being a strong jobs report, which actually was people didn't know what that meant for stocks because then you see the strong jobs report, then the kind of the bearish side to that is saying, okay, now the Fed can keep raising rates because we're still hiring. So that's kind of like we got a good jobs number and then stocks were down because the implication was that, okay, maybe that means that the Fed can keep raising rates. Not here for humanity saying, lastly, mining companies is difficult to value. So I prefer to focus on JJC and use the miners. Yeah, I've never yeah, VR, and that's what I think the theme is with hiring and laying off right now is you're seeing like these high growth tech companies that maybe grew a little bit too much too fast during COVID, so some like SaaS plays and whatnot. Um, but the but yeah, I mean the companies that are going into the actual economy are hiring. Maybe you are a good trader, but your macroeconomics suck very badly. All right, Dancer and Maya. I mean, to each their own. I'm all for embracing debate, bringing on different viewpoints. But let me know specifically what you think I'm wrong on because we did add jobs in June, and I'm not like believe me, I'm not saying there isn't data out there indicating that we could be heading toward a recession. There certainly is. That's why I said we have a lot of conflicting data out there that like half the data I see indicates okay, we are heading toward a recession, and then the other half indicates okay, we're fine actually right now. So that's why I'm sitting here saying I don't know. I'm saying I don't know if we're heading toward a recession or not. I think the people out there that are calling for a huge recession, for a huge '07, '08 recession, um, don't really have, aren't really looking at the overall data. They're not looking at everything out there. So again, let me know exactly what macro you disagree with, and we can discuss that. Let's see some of the top headlines from Benzinga.com today, guys. We've been making a lot of improvements on the homepage, so go check it out and always leave feedback in the chat. So let's find out why hydrogen fuel cell company Plug Power is getting hammered today. That seems interesting. This is for Henry. Henry's one of my favorite Benzinga writers we have. So Plug Power shares are trading lower by about 13%. Okay, so this is because Manchin said that he's not going to support a climate change bill. So essentially, and let me go ahead and get my Benzinga Pro pulled up. Essentially all solar and clean energy stocks are trading down today because Senator Manchin, which it shouldn't be surprising to anyone. I don't know if anyone out there like follows U.S. politics or anything, but Manchin is a senator from West Virginia. West Virginia is one of the biggest coal states in the country. So very big in like fossil fuels, and Manchin actually gets a lot of his funding, his campaign funding from the oil and gas kind of coal companies. So to expect him to support a clean energy bill is it's just not going to happen. So your iClean is actually only down 2.3% today. It looks like maybe we've come back a decent amount. Let's pull up a 5-minute chart, kind of see some of this intraday action. Yeah, oh yeah. So iClean got all the way down to about $18 flat and has now come back up to 1868. Matt McComb saying that's why the S&P 500 has been range bound. The data is conflicting and trying to work it out in the market. Yeah, 100%, Matt. Like that was basically my point. Was that there's just so much conflicting macro data out there that even like the strongest, traders and economists are looking at everything and saying we don't know. Like we don't know if a year from now we're in a complete recession or if we're making new all-time highs. That's why if you look at the different banks, they're kind of benchmarks, their targets, they're all over the place, right? Like, I think Bank of America is the most bearish, and they said their like base case, they think we're down on the S&P 500 from here, but then Citi came out and said we're like making highs. So I'm not really sure. Mr. Luke Jacoby is asking, is Joe Manchin a good trader like Nancy? That's a good question. I did shoot. Let me try to remember what this website is called. There's this cool interactive website where you can see all the different senators, traders, senator trading tracker website. Let's try to find this real quick. Oh, I think I found it very quickly. All right. Oh, Matty Ice. Matty Ice, shout out Matty Ice in the chat. Been a minute since I've seen you in the chat. Matty Ice, honestly, so it's a Friday show. We're just having some fun. Matty, if you want to hop on and talk about some of the trades you've been making in a few minutes, let me know, and I'd be happy to have you on. No, I think they created new rules, I believe, to limit like traders for the Senate. All right, so this is from Quiver Quant. And it's a really cool kind of, you can click here and just let's see if we can find Manchin. Oh, here we go. All right, so yeah, Manchin is a pretty good trader. Can we pull up like the S&P 500 and just, oh, is this the, oh yeah, this is the S&P 500. All right. So looks like Manchin's outperformed. Well, Manchin's, he's had a decent, so I think the return here, it's like above 1 is better than the S&P 500. I think below 1 is worse. So maybe he was doing worse than the S&P 500 for a little bit, but now he's doing better. But yeah, basically anyway, that's why, you know, Manchin, you can't expect him to support any clean energy bill. He's got his hands tied up into oil and gas, into coal. So, as far as different clean energy stocks, Abel Matthews saying we should use all forms of energy that's efficient and cheap, not pick winners and losers. Government always screws it up. Yeah, and that's what's really interesting is that, like, you know, I think a lot of people believe we have this sort of like capitalistic free market. Not really. Like, there's a lot of clean energy that's actually cheaper right now than oil and gas and coal. And like, to me, it's just such an obvious thing where it's like, all right, obviously we don't have the infrastructure for clean energy to meet all our needs with with things like solar, with things like wind, with things like hydrogen. So we're gonna need coal and oil and gas in the interim to get us to that point, and LNG, liquefied natty gas. So we're gonna need all these things. Why not just use the combination that gets us to where energy costs are the cheapest to the American people? That way, they're spending less money on energy, more money is going into other parts of the economy. And then over time, as wind and solar get cheaper, then you start bringing those in more. Enough of the pipeline. Now China, for poops and giggles, I'm paper trading with TOS and went from 89 to 94K. Yeah, and like, so here's the thing. Oh, here's my thing with paper trading. If you want to use paper trading to, you know, kind of practice a new strategy, or maybe like, okay, like say you've never options traded before, and before you want to spend your real money trading options, you want to paper trade and get the hang of it. Great. That's what paper trading is perfect for. I don't think if you went from zero, you knew nothing about trading, you knew nothing about investing, and you practiced only on paper trading and then went to a real account, I don't know how well that sets you up for the real account, just because there's such a difference in losing money, like real money, versus losing paper money. You know, we like think about for an options trade, for example. If you buy a contract for $100, for $1, it's $100, it costs you $100. And all of a sudden you're sitting on a 20% loss 5 minutes after the trade, but your thesis is still good. If you're paper trading, chances are you're going to hold on to that and say like, okay, like I still am holding these Tesla calls. I still think Tesla is going to go higher, whatever. You do that with real money, chances are you might sell that, you might sell that call when you're down 20% because you don't like seeing that you've lost 20 bucks in 5 minutes. And it's harder to sit on those losses. So we'll see. Will Matthews saying China hold the most rare earth metals like cobalt, lithium, and many others by like 70, 90%. Yeah, I mean the energy thing is crazy. I think a lot of I mean I support clean energy, but if it means like like I wouldn't support phasing out oil and gas right now to the point where it would create a huge increase in all of our energy costs. Like I think looking at what is the best for like everyday Americans, what is the best for working people, like that is going to bring us to the best policy, not just what do the oil and gas companies want. We're gonna make our bills and policies based on what the companies that are paying Joe Manchin wants. Like no, I don't think that's right. I don't think it's right either that clean energy companies should be able to pay a lot of money and get bills written. So we'll see. Um, Let me pull up while we're on energy. I do have a cool little chart here. Let me try to find it for clean energy, showing just how cheap clean energy has actually gotten over the past few years as technology has advanced. And then, as always, guys, let me know in the chat what stocks you guys are watching, what trades you guys are looking at. I'm trying to find. I like to figure out. I'm trying to find like the next what shorts I like going into next week, like as we go into earnings season. Because like I said earlier, like my thesis is we're going to see, a lot of these companies kind of report some not so great earnings. Okay, yeah, here's what I was trying to show. Honestly, I don't even know how to share this on my screen. Let's try to figure this out. Hey, producer Aaron or producer Rohan, are we gonna do trivia today? Can we do maybe we can do some can we do some user calls? Free energy should be the future. Yeah, I'm down for that for sure. I'm down for free energy. Let me try to find hey, do you guys know how I can pull up a yeah, so here, let me share this. I was trying to find this chart that was showing how throughout the last like 12 months, as there's been a huge increase in demand for oil and gas, some clean energy has actually gotten cheaper than oil and gas, which it just goes against like the whole like people are like, oh yeah, renewable energies are great, but they're so much more expensive. Record low price for UK offshore wind, 4 times cheaper than gas. UK working toward being able to operate a stable and secure grid without any fossil fuel plants for hours at a time by 2025. Yeah, and so this is where that guy's kind of making fun of it. Like, how can we afford it? Like, that's always been the biggest thing with clean energy is they're always saying it's more expensive. But like you see with Moore's law, like you see with other things, over time the technology becomes cheaper and it becomes more economically feasible. So as technology advances, I think you're going to keep seeing these keep seeing these different clean energy tactics get more and more kind of reasonable, kind of more feasible. So we shall see. Heather Kane is asking, will Apple push to 150 today? Let's see. Let me get my Benzinga Pro pulled back up. I'm still curious what that person, I don't know if that person that said my macro sucks in the chat is still here, because I wanted like some specifics, hearing them what they disagreed with what I said. Because like I said, I'm always happy to, I mean, if you guys were on the show with us yesterday, like I'm happy to have people on that I disagree with, and I think it's productive. I think that's good to have kind of productive conversations out of disagreement rather than people just saying the same things. And I've never claimed to be a macro economist. Like I'm seeing what I see from other economists. Like I'm reporting on what I see from other economists. So the ghost saying my macros are fine. Yeah, it's not about that. I'm not like self-conscious about my macros. Trust me, I know my macros are good, bro. I keep my macros right, bro. I'm saying I just wanted to know specifically like what their problem was with what I had to say, because then we could have a conversation about it and say, okay, you think okay, it was Dancer. Let's see. No, they left. They left the chat. They thought my macros were too bad and they left. All right. What were we gonna look at? Apple before I got sidetracked. Apple, will we push 150 today? Sure, why not? I mean, we're already at 149. It's only $1 away, right? Like it's only $1. $1's not that much. So sure, why not? $1.50, sure. No, but for real, we're looking at a 5-minute chart here. I mean, look, we hit our highs of the day at 150.34. So, or actually, sorry, 150.86. So we've hit this high 150.86. I mean, I would just watch it. It looks like we're kind of, I mean, this is a 5-minute chart, so we're not like, this isn't, some crazy data set we're looking at. We're just looking at today's price action, and it looks like we're kind of trading in this range. We keep coming down and testing this 149 level, keep bouncing from there. I would honestly, maybe like right here. I mean, it does look like we've gotten a few good green candles in a row. So, sorry, I'm seeing crypto the only. It's got me kind of weak in the chat with this comment. He goes, if stocks rally, crypto rallies. If crypto rallies, stocks rally. Let's go. Yeah, and I mean that's why it's, I don't know. That's been one of my, I guess, biggest problems with Bitcoin over the past like year and a half. Is it's like if it's gonna be so tied to the S&P 500, if it's gonna be so tied to Nasdaq and the Qs, like why even trade it, right? Like obviously Bitcoin has come down further than the Qs. Like we go look at Bitcoin from 70K to 20K. The Qs haven't gone down 70%, but the point being, right? Let's overlay. Let me figure out how to do this. Okay, I gotta click the compare button. Let's compare it to the Qs. It's not gonna be exactly the same, but see, I mean, all right, what the hell? I mean, yeah, like when the Qs are going down, Bitcoin's going down. I mean, and that's why it's so funny. I had calls going into Qs today, and what was I doing overnight? I was watching Bitcoin. So I was like, all right, if Bitcoin's up 5%, that means that the Q should open up tomorrow. And it's really, I think, because both your indices and Bitcoin can be kind of just a measure of risk on versus risk off. So when Bitcoin and the equities are going up, people are willing to take on more risk. When they're going down, people are unwilling to take on that risk. The only thing I would listen to a teenager about is social media. Yeah, I agree, and that's why like it's been that was why it was like one of my biggest things where I was always talking about like talk to the people that are younger and that know more about shit that you don't know about. And I always had like I'd talk to parents and their kids would like they'd be like, "Oh yeah, like my kids are just all up and about Roblox. They love it. They love it. They love it." And then like so I don't know. I mean, does that mean you should have bought Roblox at 120? No, of course not. But yeah, and that's the other thing too. I think with one of my I wouldn't say problems with crypto, but I guess just like one of my questions is like like why would I go out and buy Ethereum when Ethereum is basically going to kind of like lag Bitcoin and wait, and then if like Bitcoin is up, Ethereum will be up. And I know there were times where Ethereum was outperforming Bitcoin, but it does feel like that. Like Bitcoin is the line leader, right? Like if you're in 3rd grade and you're walking down the hall and they make you get in a single file line, Bitcoin's your line leader, and when Bitcoin turns left, all the other cryptos turn left. When Bitcoin turns right, all the other cryptos turn right. So, yeah. So, quick rundown on the show. So here in about 10 minutes or so, we will have Nick Majuli joining us. Nick Majuli is a great follow on Twitter. Let me go ahead and get his Twitter in the chat so you guys can give him a follow there. Dollars and Data. He's been helping people build wealth since 2017, according to his Twitter bio, but he just had a book come out a few months ago called Just Keep Buying, Act Smarter, Live Richer. Proven ways to save money and build your wealth. So I'm excited to get Nick on to talk about the book and talk about kind of his strategies and really why he wrote the book, because I do think that, so what's interesting to me is there's a lot of data out there that shows that for people that quote unquote dumb money, right? Like retail traders. And you gotta think about like what all that encompasses. Retail investors encompasses even people who aren't active in the markets, but they're just making recurring investments into their retirement account each 2 weeks when they get paid. Those are retail investors. And there's a lot of data out there that actually shows that buying and holding, like your buy and hold investor, actually outperforms like a lot of hedge funds and active traders over time. So if you're actively just adding to the S&P 500 every 2 weeks, it's boring. It's not exciting. It's not sexy. You're not out there trading options, making thousands of percent. But there's a lot of data out there that shows that you end up outperforming like a lot of hedge funds, a lot of active traders. Of course, you're gonna have your why is the name escaping me? What's Jim Simmons' name? What's the name of his quant firm? Someone help me. Someone help me. Someone help me. What's the biggest quant firm? Jim Simmons. Something with an R. All right, regardless, like that quant firm is probably going to outperform you when you're just buying and holding. But the point still stands. Like if Andrew left, whatever at Citron, like has a bad quarter, chances are you're going to outperform them, by buying and holding. So I do think, and we've talked about this a couple times in the past couple weeks, that dollar cost averaging is actually kind of a polarizing. No, not Bridgewater. Frick. What the hell is the name of this company? I think that's his name, Jim Simmons. It's like the biggest quant firm. It's on the tip of my tongue. But dollar cost averaging is actually kind of polarizing, right? Like some people think it's a terrible strategy, and I agree it's a terrible strategy if you're doing it on like a speculative asset, like a QuantumScape or whatever. That's the example I gave yesterday. But if you're doing it in the S&P 500, you're doing it in the Invesco QQQ, or you're doing it in something that over time has gone up, then dollar cost averaging is a fine strategy. That's exactly how, like I said, when I've had friends that have asked me to get them into investing and stuff, I don't teach them about options. No, I get them a Robinhood account. I put them in I put them all right. You guys are no help. I'm gonna Google it myself. I have a computer right in front of me. Tell Jim Simmons. I don't even know if that's his name. Jim Simmons invest. Yeah, okay. You guys are why Renaissance. Thank you, Mike. Thank you. I told you. Okay, thank you. Finally, someone's helping me out. When I finally was gonna do it myself and Google what company Jim Simmons works for, or founded, or whatever, it's called Renaissance. So my point was, if you're buying and holding, chances are Renaissance gonna outperform you in a quarter, sure, in a year, probably. But not every firm. Like if you look at a list of 100 hedge funds, 100 firms, you can actually outperform a lot of them just with this strategy. So we're gonna talk to Nick about that. We're gonna talk to Nick Majuli. Chill out. I was kidding. I'm chill. I don't care. You guys don't have to help me. I'm a big boy. I got my own laptop. I can figure things out on my own. But yeah, that is a good team win. Shout out everyone in the chat saying Renaissance. 60% annual return. I mean, it is literally, yeah, I would implore anyone who's into like just math and nerds out on like investing stuff in general to read more and learn more about the Renaissance Jim Simmons story, because he really like freaking broke the market. Like came in and said like, all right, I'm going to be smarter than everyone out here. I'm going to figure something out that no one's done before and just beat the market. I was kidding, guys. Like I was kidding. I'm sorry. I'm sorry. I keep stuff TLT. Oh, I keep seeing TLT. The bond. I don't know. I'll be honest. Like, here's where that person saying my macros suck is right. I don't understand the TLT. Like, someone said it was inverse from the actual bond market the other day. Like, I don't understand. So honestly, that macro Alf guy we had on yesterday, he's a great macro dude for looking at like bonds and looking at interest rates and looking at the treasury yield. So maybe we'll keep talking to him. Let's see. It's a soft year 20 TLT. Yeah, man. I mean, I don't know. I'm not really going to pretend to completely understand the TLT right here, but let's go check back in on the overall markets here. S&P 500 up 1.7%. Dow still looks like your leader today, actually, out of all the indices. Rare to see, but your Dow is up 1.88%. Again, I think that's pretty much all due to the financials performing so well today. Your Qs up about 1.5%. We should be in TBT and UDN, but yield is inverted to TLT price or something like that. Look, I know. I'm just saying, like, looking at the bond or here. I don't know. Honestly, maybe our next guest understands the bond market and how the TLT is inverted from that or something. But we did see. Let's check back in on because this was something we were talking about a lot yesterday. So after Wednesday's CPI data, we had the odds that we got in 100 basis point hike come in. We had that jump up to 80%. And since we've had that come down, it went from 80% now down to 28. You can look here. So a day ago, right, we had a 55% chance of another 75 basis point hike. Now we have 71. So something in the past 2 days has made the Fed swaps futures market more bullish that we're going to get a 75 basis point hike. I assume a lot of that came out down to the Governor Waller's comments yesterday, where he basically said, we're not so quick ready to call for an 100 basis point hike right now. We need to see some more data. So I don't really know exactly what data they're looking at, because I think any of the lagging data from June shows, okay, inflation was the highest we've seen. But then if you're looking at a lot of the data we're seeing now throughout July, whether it's gas prices falling, whether it's all these different commodities falling, I could see where maybe Waller and Powell come in here and look at that and say, okay, we've got some data indicating that inflation is coming down. Maybe we stick to the 75 for another month and we wait and get next month's CPI, and then we'll bump up to a full percent if we need to. That's where I would, like, if I were the Fed, if I were Jerome Powell, that's probably what I would do. And it sounds like that's kind of where they're going with that. So we'll see. We'll keep monitoring this, just because I do think right now a full basis point of a full percentage rate hike isn't baked in. So if for some reason we went back to that, I would expect to see some stocks come down a little bit, but we shall see. We shall see. Let's see. Matty Ice is saying the relationship between long-term bonds and interest rates is a curve, lower interest rates. Yeah, and I get that. It's just more so like the idea. So here's what confuses me. I'll be honest. A seesaw price up, make yield go down. Okay. Here's what's just confusing to me is looking at the TLT going back to like 07, 08. Why was it getting crushed so much? Like, wouldn't people be buying bonds in like risky, uncertain times? When do I want to do trivia? Let's do it 12:30. 12:30, half an hour. I don't really know. I told you we're gonna get a bond expert on. Like, let's pull up a monthly chart on the TLT, and you go back to 07, 08. Like, these things were getting crushed. Like, isn't that when bonds should be doing well, when other equities are getting crushed? I don't know. Remember par value. All right, we're next week. Someone remind me. Someone make a note. Shelly, you out there? Make a note. We're getting a bond expert on next week to talk about TLT. Honestly, might have to bring Alpha on again. All right, guys. I do see our first guest hanging out in the background. Let me get my headphones on. So we're bringing on Nick Majuli. Nick is at Dollars and Data on Twitter. Let me go ahead and drop that Twitter in the chat so y'all can give him a follow. But Nick had a book come out a few months ago called Just Keep Buying. We're going to talk to Nick about the book, talk to him about kind of his background in investing and finance. So without further ado, Once I get a little thumbs up or sign from Nick that he is ready to go in the background, we'll give him our special intro and bring Nick on the show. Beautiful. We got that sign. Let's give him our very, very special intro, especially for a first-time Benzinga Live guest, and bring Nick on. Mr. Majuli, how's it going?
How you doing, Aaron?
I'm good. Welcome to Benzinga Live. Great to have you on the show.
Thanks for having me on. Very excited.
So, Nick, I've been following you on Twitter for a while. You're one of actually, I would put you in my like top 10 probably, in finance and investing follows on Twitter. Before we get started, you just want to give our audience kind of an introduction to yourself, like your background, kind of how you got into, posting finance stuff on Twitter and then eventually writing your book.
Yeah, so I got an econ degree, went into litigation consulting, and that's kind of where I got my data skills from, kind of did a lot of analytics there. And in the course of doing that, realized that, even though I love doing data work and all that at analytics firm, at the same time, I kind of really love finance more. So started blogging early 2017, blogged for 4 years. Obviously COVID happened. And then I was like, hey, I have all this great stuff I've written. So I feel like I can put this into a overarching philosophy and come out with a book. And that's, kind of how the book was written early 2021 and was released this year, 2022. So that's kind of a quick background, but yeah, I have a data background. I eventually did take that, and I now work at a wealth management firm. So I am in finance now, but I've been there since, mid 2018. So it's a little over 4 years in financial services, but yeah.
Okay, so you're at a wealth management firm right now.
Yeah, I'm with Ritholtz with Barry Ritholtz, Josh Brown, Michael Batnick, Ben Carlson, if you know any of those names. So
yeah, of
content
course.
creators in the space, yeah.
Of course, yeah, I know. Barry's big, huge. That's awesome. I thought, I didn't know if maybe you were doing like writing and like financial media full time, but that's cool to hear that you're doing wealth management as well.
Nope, it's all a side gig. I still have a 9-to-5 job, which I'm very busy with. So.
I don't know if it was you. I know I saw something on Twitter the other day, some like thread or someone shared a bunch of data just about dollar cost averaging in general, and basically was talking about how over time that quote unquote like dumb money of just buying and holding over time actually outperforms like a lot of active hedge funds. Was that you that was sharing that?
Well, I mean, I've written about that many times. I didn't do a thread about that recently, but I did write a post on, in defense of dollar cost averaging. I didn't show it against hedge funds though, but generally hedge funds have underperformed even, in down markets.
So that was your post though in defense of dollar cost averaging.
Yep, that was mine.
Okay.
Yep.
I remember that one, but there was another one specifically where someone, I think there might be like there's some like DCA Twitter account out there that I think was the one sharing the returns based on like hedge funds and if you were buying and holding. So let's get to the book. So it's called Just Keep Buying. The title seems pretty self-explanatory. If I had to guess what the book is about without opening it, I'd guess it's about dollar cost averaging and continuously buying stocks or the indexes. Is that correct?
Yeah, I mean, it's a data-driven approach to personal finance and investing. So that's not the entire piece of the book. That's like the main. If I could only give you 3 words to try and help you build wealth, that's the 3 words I would give you. If I had a sentence, I would say it's the continual purchase of a diverse set of income-producing assets. That's the sentence. If I had to expand beyond that, you get the book, right? But it covers a lot more than that. It does. There's a big piece. The first half is all personal finance. The second half is investing, and so it's basically kind of like a somewhat of a choose your own adventure story where I say like, hey, like where are you in your financial journey? Like if you're 20 years old and you're just starting out, like you want to read the book, from cover to cover. If you're someone who's like retired where you're not going to be saving money anymore, doing, anything like that, you're probably going to want to just focus on the investment section at the end. But it does really show you where to focus and kind of where to spend your time based on that.
So where do you think people like what is the biggest issue that people run into if they're starting to get into investing? Is it that they don't have the patience to do that, to just every 2 weeks put $300 into the S&P 500, or what's the biggest problem that people have with doing this?
I think the biggest problem is that they spend too much time focusing or worrying about their investments, especially if they're getting started. If you're putting like $100 a week or whatever, like, no offense, that's not, I mean, right now, that's not enough money where it's going to matter what you invest in or anything like that in the short term. Of course, over the long term, as that adds up and becomes more money, it becomes more and more important. But like, I remember when I was 23, and I tell the story in the book, and I had, I was spending all this time, look at my asset allocation. Should I be 10% bonds, 5%, 15%? I was like kind of neurotic about it, spending all this time looking at all this stuff. And I only had $1,000 invested at the time, right? Even a 10% return's $100, right? So like I was going out and regularly blowing $100. I was living in San Francisco at the time with my friends. I'd go out, Uber, drinks, all that stuff. Within, a dinner, within one night, $100 was easy to spend, right? So I think people are spending too much time like super focused on markets when they probably be better served. I mean, just from a financial perspective, to like really just like increase their income, right? Or find another job or do something that'll increase your income, at least in the short term. And then once you have more money, then as you have more and more money, that leverage of your investment knowledge matters more. It doesn't matter as much early on. I'm not trying to tell people not to learn about investing. Of course not. I would never say that, right? At the same time, though, I think people focus on it too much.
Yeah. And, a couple of thoughts there. First, like, I was just having this conversation with someone the other day where it's like people, I feel like with investing don't often think about like the time spent and opportunity cost. So like, for example, if I, set up, and I've done this with some of my friends who like wanted to get into investing, like, all right, here's what we're going to do. I'm going to set you up a Robinhood account or whatever. We're going to set a recurring investment into the S&P 500, $200 a week or whatever. And then like just literally delete the app. Like you don't need to look at the app. It's going to automatically take $200 out of your account, put it into the S&P 500. And if you take like someone doing something like that versus someone who's spending, maybe they're not trading full time, but maybe they're spending 2 hours a day looking at their portfolio, whatever, and tweaking things around. Maybe the person that's spending 2 hours a day gets an extra 2% at the end of the year on their return. But is that 2% worth like that 10 hours a week versus you can literally just sit this aside, not worry about it? And like what you're saying, if you're 23, focus on how you can make some more money, do some other things. Don't focus on if you have 88% of your portfolio in SPY or 85%. It's like, it's not going to matter in the long run.
Yeah. I mean, in the example you gave with the whole, 2 hours a day, that's 10 hours a week. Let's just say they're, 50 weeks to make it simple, like 500 hours basically they spent. And if they get an extra 2% in their portfolio, even on $10,000, right? 2% is $200. So you're looking at, $200 for 500 hours. So you can do the math on what your hourly rate is, but it's not very high. So you see you're making 40 cents an hour for every hour you spend doing that. And I guarantee you that you can make more than 40 cents an hour doing anything else, basically. So.
Right. And so that's why it's like, yeah. And I mean, chances are most people out there, no matter how much time they spend looking at their portfolio or looking at the market, don't even outperform the market. So at that point, why try? Why not just put it in? Don't waste your time. Like you said, find different ways to make money. So Nick, so right now you work at a wealth management firm. You wrote your book. What is, on like a day-to-day basis, are you helping manage other people's portfolios? Are you looking at just data, writing like, reports on different data you're seeing?
No, my day-to-day, I work in operations. So I'm more of like an engineering role where I'm basically making sure that everyone's working effectively together and we're trying to be as efficient as possible. So making sure workflows are set up, making sure the websites are taking in, leads, looking at, page view data, all that type of stuff, right? It's kind of just like looking at the entire organization, what we're doing to make sure we're serving our clients effectively. So it's kind of like it's a very technical role, a lot of, data science. There's a lot of, tech stack stuff, but yeah. So I'm not really, I don't talk to the clients. That's what the advisors do. The advisors are talking to the clients. I'm just making sure that like when they open new accounts, when they're trading their accounts, all that type of stuff is being done efficiently, as efficiently as possible for both our clients and our employees.
Got it. So do you, are you following like the markets on a day-to-day basis or not really?
No, day to day, never. No. I mean, I do have to I write about it because people care about it. So that's the only reason. Honestly, if people didn't care about markets as much, I wouldn't be writing about them. Like data, I only write about them because the market's down 20%, inflation's 9%. It's like I have to write about this because I think people care about it. But generally, I would not write about that at all. I don't find this is not interesting to me because I just know this has happened. If you know history, once you've studied history enough, it's like, oh, it's like getting upset about the rain or something. Like it's going to imagine it started raining. You said it's going to rain forever. It's a ridiculous assumption, right? But there are times where, yes, you have a really bad storm that lasts a couple of days, and that's terrible. You have a hurricane or something, right? Those are awful moments, but at the end of the day, they pass, right? It's the same thing. And so it's a ridiculous analogy, but that analogy shows kind of how people react right now. So if the market was still down 10 years from now, it could happen. Of course, it would be surprising, but I think it's unlikely.
Yeah, and so I mean, like in that sense, like talking about what's been going on in the markets recently, obviously we've had this 20% drawdown, whatever. So looking at someone who is essentially just someone continuously buying and holding, like, do you talk about in your book anything like when, bear markets like this hit? Like, are there ways where you would ever think it would make sense to maybe like hedge your portfolio or sell some at the top? Or are you just saying like, no, like even when you're down 20%, just keep buying, you'll be fine?
Yeah, I mean, if you're able to get more cash to deploy more cash, like obviously like with low risk, you're not like taking your emergency savings and putting it in. That's obviously preferred because when you're buying it, and this is I talk about this in chapter 17. And basically it's just like if you can buy during dips, you're going to, if the market recovers or when it recovers, you're going to see a bigger return, right? Than if you bought at an all-time high. But yeah, I don't recommend any sort of selling at the top type of thing. You just won't know when it happens. It's very difficult to know, and markets are so unpredictable, right? I mean, just look at March 2020. I think it's the best example of it, right? We were down at the bottom on March 23rd, 2020. Within 6 months, we were back at an all-time high, right? No one could have predicted that. Like the literally economy was coming to a halt, and yet, markets hit an all-time high within 6 months. And so you can say it was inflated, this, that, whatever, but it's just they're unpredictable, right? So I have no idea what's going to happen from here. And I think it's really tough to know. And so I think there's a lot of people saying, oh, should we sell? Should we do this? Should we do that? I'm like, no, don't try and change big tactics. If you're a little worried, if you're like worried about something happening to your job or something, then start saving more cash. And that's just like, maybe you think maybe your emergency fund wasn't sufficient before and you need to save more cash. Like that's an example of where like, if you start to feel nervous, it's probably because you don't have enough, dry powder there for you just to like feel safe for you and your family or whatever.
Yeah, but so when you're talking about like increasing your purchase, so say like if I were doing, and just for simple sakes, like we'll just say I was doing $100 in the S&P every 2 weeks on my paycheck, and now that we're down 20%, you're saying if I could, you know, comfortably increase that to like 150, like while we're down, is actually a time where you would want to like increase your purchases.
Yeah, of course. I mean, because assuming it recovers, you're getting more of a return, right? The issue is like my counter to this is like, why couldn't you put 150 before? If you can somehow find the money now, why couldn't you find it before, right? It's almost like one of those type of arguments. And you're saying, well, okay, I'm going to cut my spending in this area so that I have the extra money to put here. And you could do that if you want to. I'm not saying you need to do that, but it's something if you're really like trying to grow your wealth, like it's generally better to buy when there's, a decline in the market. So.
Yeah. And I find myself sometimes thinking too, like where I'm like in my mid 20s, it's like I hope like in my career and stuff as I get older and stuff, like I'll be making more money down the road, and that way I'll be able to like save more and invest more down the road. Like maybe I should just not even like, instead of trying to max out what I can invest right now, like spend some of that. Like I'm not gonna be able to spend money when I'm 25 forever.
I agree. Yeah, and there's a great book I just read on this called Die with Zero by Bill Perkins. So it's an older book, but I just read it recently, and I was like, yeah, this is I completely agree with that. There's this idea that economists have called consumption smoothing, where you kind of like they would say you borrow early in life, right, and you kind of take on debt or whatever, and then if assuming your earnings go up, most people's earnings do go up over time, you end up paying that off and saving a lot more later, and that's definitely possible. Because yeah, I mean the thing about starting early, investing early, the reason that matters is the number of years you have to compound. But really, if you can do catch up contributions in your 30s or 40s, if you expect that, then you don't have to necessarily save early. I just generally recommend it because it's really tough to predict the future. That's all.
No, 100%. And that's why it's like where like, yeah, I've kind of had that laid out, where I've seen economists lay that out before, that like money you spend when you're younger is actually like you get more enjoyment out of that than like money you're spent when you're older. So it's like, if I am saving $1,000 a year right now, and like I think that's great, but it's cutting into what I'm like spending and what I can do in my life, and then in 20 years I'm saving $30,000 a year anyway because I'm making that much more. Like that $1,000 a year isn't going to matter that much in the long run.
Yeah, I agree. And this is a great question on like thinking about your utility, spending, health. There's a lot of questions here, right? Because we don't know. I think COVID was a big eye opener there because like so many people. I mean, imagine you're 55, 60 years old, you're on vacation somewhere, and this random illness starts popping up, and next thing you get sick, and God forbid you die, right? And it's like these are people that probably had millions of dollars in retirement that they planned on spending, they never got to spend, right? So there are obviously cases where things like this happen. But yeah, I mean, you just gotta kind of pick and choose what you want to do with it.
Yeah, I mean, it's also too like the mindset of like, if like if I did everything in my life solely to maximize the amount of like money I was putting in my investment portfolio. Like I feel like you can buy into that, and it's like, all right, now I'm not going on trips. Like I got to save this $500, put it in here. But at the end of the day, like all you're doing is growing your portfolio. You're not like spending it. You're not doing it. You know, it's like who cares if your portfolio has 100,000 or 80,000? You know.
Yeah, exactly. Right. So I think you gotta find that balance, right, where you feel like you're enjoying life enough now, but you're also putting some away for the future.
So outside of, you know, investing in the stock market, are you a fan of any other types of like personal finance ways to like make money or save money?
I mean, there's all sorts of. I mean, investing in income producing assets, whether that's equities, real estate, royalties. There's so many different ones out. Farmland, right? There's a lot of ones we can talk about. Outside of that, you can make your own products, right? You can kind of create, for example, I have a newsletter, and technically I sell advertising through the newsletter and through the blog. That's another way. I have a book which now makes money. So I mean, they're all kind of correlated to finance and financial markets because I write about finance. But if I was writing about cooking or something, it didn't have to be. If I was, had a photography blog, they don't have to be. But that's kind of the thing. It's like you can definitely create that. It just takes time. Like it took me like basically 3 years before I started making any real money with this endeavor. So it just took 3 years. And I did it very slowly. There are people that I've seen do it much more quickly. They just grow their list very quickly. They use growth hacking and all this stuff. I didn't do any of that. I didn't made every mistake out there. But I was able, though I made all these mistakes, I kind of learned a lot of the fundamentals just more slowly. And I just understand how to actually make a business out of some of these things now, which has been interesting. So
yeah, and I noticed that on your Twitter, like your Twitter account was only started in like 2016. Like that's a lot of growth in 5 years. I mean, there's a lot of people on Twitter that have had their account since 2010 and they don't have 200,000 followers.
Yeah. So, I started beginning of 2017. So yeah, I mean, I remember late 2016. I was like, I think I did it like New Year's Eve. It was a New Year's resolution basically. So I think I did it like December 30th or December 31st. I registered the name. And then since then I've just been kind of tweeting my blog once a week, and it's been like 300 weeks now. So
yeah, I'm looking at it right now. Joined December 2016. So
Mhm.
yep, right there at the end of the year. Yeah, well, that's impressive seeing that growth in just a couple of years. So I guess so on that note, like you said, there's kind of always the opportunity to create new side hustles or find new ways to like produce some extra income. Do you prefer, as far as on the investment side, do you prefer, I understand there are a lot of income producing assets. Do you prefer the stock market compared to real estate, compared to royalties?
I prefer the stock market because I understand it more, and it's also very simple. It's easy. It's very liquid. It's versus like try to do royalties. There's like deals you have to do. It's a very private transaction. Usually, you can't buy like a index fund of royalties. Generally, I don't think that exists as far as I know. Same with like farmland. A lot of times, you have to buy an individual farm. There are some REITs that do farmland, like more diversified, but a lot of times when you get into a lot of these things, you have to do individual purchases, right? So I like diversification for a host of reasons. So that's kind of why I choose stocks, and I don't just do US. Obviously, I have international as well, developed and emerging.
Yeah. So wait, when you say royalties, like what do you like? Do you mean like you buy the rights to like a song and then you get the royalties from that?
Yeah. So I don't have, just full disclaimer, I don't have any sort of relationship with this company, but there's a company called Royalty Exchange that does this. And, I've never actually done it, but it's a little bit, usually the investment size is a little bit larger, but yeah, you put in like, I don't know, a couple $100,000 and this thing pays you royalties for that, for like a song or something, right? For like 20 grand a year, you'll get the song rights, and you'll just make that for like a 10-year period, maybe. So you can bid on it and buy it, and then you just make the royalty money on it. And obviously if something happens, if like an old song becomes popular again, or let's say the artist dies or something, and there's like a huge wave of people wanting to listen to it, like you'll see a huge spike in earnings, right? So it's things like that where, I haven't really done much of that yet. I do plan to do that eventually, but that's an income producing asset that's out there. So
yeah, no, that's really cool. That I know just a couple weeks ago, I guess there was like a Metallica song in Stranger Things, and a bunch of like kids on Netflix who had never heard of Metallica before go to like Spotify and they're looking for Metallica. It's like if you own that song and then Spotify chooses to use it, you're really rich now. But I agree. I mean, I think like you said, there are a lot of, and I see this all the time on like TikTok and Twitter and stuff where people are like, oh, like I bought, I own 7 laundromats now. You got to buy cash flowing businesses, and like all these people that like run these side hustles of like different things. And it's like, all right, like that's great, but there's a lot of barriers to entry for a lot of these things, real estate specifically. Like if you want to go buy a house, like it's a lot harder to do than just going to buy the S&P 500. So it's like, to me, that's why it's always easiest. Like if people want to get into investing, like, all right, just start with the stock market. It's the easiest. Maybe when you're, have enough money to where you really need to diversify beyond the stock market and you want real estate, art, whatever, like that makes sense if you're ultra wealthy. But for now, just buy the stock market.
Yeah, I mean, there's a lot of ways you can do this. Right, you can get a REIT, right, real estate investment trust. That you can get a diversified portfolio of real estate, whether commercial, residential, etc. With art, there are crowdsourced platforms. So, full disclaimer, I actually do have a relationship with this company, but Masterworks is one where they like take a piece of art, with some famous art, whatever, Picasso, whatever it is, and then they sell it to a group of investors, and everyone gets to buy like a little piece of it. So, like, I own like this much of like a Basquiat, like just this much, given how much I put in relative.
Wait, me too.
Painting. Yeah, so if you've used Masterworks, you kind of know that's exactly what it is, right? You just own
which Basquiat do you have?
Let me see. I have to look at it.
I have an Untitled one. I'm waiting for them to sell it. I put this money into Masterworks like a year and a half ago, and I'm like, shoot, I kind of wish I just had this money right now. It's all locked up.
Yeah, but I mean, this is kind of how it works. I'm seeing my portfolio. Let me see, which one is it? It is the. Oh, I think I have the. Oh no, I have. It's called Dark Milk.
Oh, okay.
Yeah, it's 86 when he did it. But yeah, so I mean, yeah, this is just something you can do. It's fun if you want to do it. But yeah, we'll see what happens. I mean, I feel like the art market's still there because those people who buy that are very different than the people who are, buying the S&P and everything. So you think these are very different markets, right? It's like ultra high net worth versus, just everyone can buy, stock. So.
Yeah. Well, and you got to think too with, like something like inflation rising, like you got to imagine some of these ultra wealthy people are like, oh, I can't sit on I have $10 million sitting. I can't sit on it. It's losing money. Like, let's go buy this art piece. So like, maybe that's a thing they're doing, but I don't know. I've been trying. I don't know. I'm ready for them to sell mine. I'm ready. We actually have a relationship with Masterworks as well too, but I've been waiting. I just was like, all right, once I get my money back from Masterworks, I'm going to really put it to work and like be in charge of it instead of just having it be locked up in a box somewhere. Yeah, but it should be some decent return. I mean, if they get me 35% in a year, like whatever, I can't be mad at that.
Yeah, I agree.
All right, Nick. Well, this has been fun. It's good to get you on the show because I've been following you on Twitter for a while. I think it's been a good conversation. Is there anything kind of that's been top of mind for you recently? Maybe any data you've been looking at?
Nothing in particular. I think inflation's obviously the biggest concern everyone's thinking about right now. What's going on? Obviously, we just had the biggest print we've ever had. However, we do see some like commodities prices are starting to come down, some energy prices starting to come down. So we'll see. I hope inflation's peaked, but we will have to wait and see. It's all we can do. So that's about it.
Yeah, I mean, I think that's where like yesterday when we had the Fed governor coming in saying like, oh, we're still gonna need to like see some data. I think everyone here is so there's just a lot of data out there that's conflicting, whether it's like we're heading to a recession. No, actually the economy's fine. Like the stock market's about to crash. No, the stock market's fine. Like there's just always all this conflicting data out there. So interesting times. All right, hold on real quick. I'm just getting your book pulled up here on Amazon. So just keep buying Proven Ways to Save Money and Build Wealth. Oh, also on audiobook. Did you do the recording for that?
No, we actually had a professional do it. So I wanted a professional to do it because I mean, my voice is fine and all, but there's a lot of work to do it. So I like the professionals. I trust them. This is their craft. And so I think he did a great job. I named Kevin Meyer. So
there you go.
But thank you.
Just keep buying the Did you write this? Hugely popular finance?
They came up with all that. I did not, I swear. I think it said, I think honestly in the early drafts, it said something else like the stupendously. It was like a weird word. I was like, we can't say this.
Yeah,
like
the
illustrious financial blogger. Yes, something like that. So,
all right, guys. Well, link is in the chat. It's, okay, I can see it now. So yeah, link is in the chat. Go check out this book. The audiobook is it's free with your Audible trial. I was gonna say, how do you make money if it's a free audiobook? That makes sense.
I don't know, Amazon. You know what's this is just a side thing. Every time prices change on books and stuff like that, like me as the author, I don't see a difference in the royalty error, and that Amazon eats that basically. So they're just messing with pricing to try and get people to like buy certain things at times. So like if that's free, like I still make a royalty on it regardless, right? So that's always kind of very interesting to me, is understanding how these markets work, right? Here's another thing which is kind of interesting. The Kindle book, which you would think like, oh, like it takes nothing to produce. It's basically nothing. It's just, ink on, in a database, whatever. It's a data file. I make the same royalty on those as I do on a paperback because Amazon takes such a large cut. It's such an interesting thing. Like they just take such a high cut from the retail that they basically equated that you make the same whether you sell a Kindle book or a physical book, which is, makes sense in theory, but it's just kind of interesting. So
yeah, that is really interesting. Like you think about all the things that go into like producing and selling a paper book, you would think that would cost Amazon more than a Kindle, but I guess they've matched out to where it's like the same return.
well, they
But
just take the cut such that basically it's equated. I think Amazon takes like a 70% royalty or something. I don't know what it is. It's so high that they take a much smaller cut on a paperback, right? Even though like it doesn't make sense. Even though it's like you can infinitely create like as many Kindle books as you want, right, with very low cost, right?
I guess you could somewhat justify that on Amazon's end just by saying they like made and produced the whole Kindle ecosystem. Like that's their thing. So like they can take that cut if they want. Whereas the paper books, they're just an online reseller of.
Yeah.
But I'm surprised that I didn't know the book prices fluctuate at all. Like I would imagine that you would be able to just list the book at your price and that would be the price it's selling. But I guess maybe you give some power to Amazon there to mess with the prices when you agree to go on Amazon.
Yeah, we don't give them the power; they just have the power.
They just have the power.
No, every price on Amazon changes over time. There's a great website. It's got a good day. I think it's called Camel or something. You can look at the price history of basically any product on Amazon. So you can see like, oh, if I'm buying this now, it seems a little high. You can look and say, okay, what's the price of this and how has it changed over time? So just a fun fact for anyone listening. You can kind of save money using that tool possibly. So.
That's interesting, and maybe even a more interesting website name, Camel.
I believe.
But yeah, so, yeah, Amazon, like you said, Amazon does have the power. We actually have to speak nice because if we say anything bad, they can just shut off this whole thing. We're on AWS, so all good on Amazon. We're not talking bad about them. All right, Nick. Well, it was great to have you on. I'd love to have you on again in the future. Anytime you've got news, a new book coming out, anything like that.
All right, anytime. Thanks, Aaron. Appreciate it.
No problem. All right, guys. That was Nick Majuli. Go ahead and give him a follow on Twitter and check out his book, Just Keep Buying. Always good to get guys like Nick on who, know a thing or two. They do their research. They're not just kids out here like me that started trading during COVID and think they know some things. All right. We ready for trivia? AT? Trivia? Do we got trivia? All right. Well, I guess we're not doing trivia. Let me ask in here. All right. Let me do another quick check-in on the market since I haven't looked at that since Nick came on. I'm about to protest against these producers. They told me we were doing trivia, and now they're not here. SoFi above 618. Easy Mike's watching SoFi. What do we have pulled up right here? Oh, we're still looking at iClean right now. Let's go back to the SPY. All right, so SPY's given up a little bit. I mean, we just topped out here. Still a great day so far for the S&P. We'll see. All right, we do have trivia on the way. Buglog AB, I need you to show me how to buy and sell puts on Robinhood. All right, I can do that. All right. So what you're going to want to do is you're going to want to go to your Robinhood. You're going to want to pick a stock to trade. So let's say we are going to do, you know what? We'll just frick it. We'll just do it live. Let's do some QQQ. All right. So say I'm looking at the QQQ chart. I don't know. What do you want to do? We want to trade some calls or puts? So, okay, but Buglog, if you are just now getting into options trading, we're going to start with some basics. And then as you do some basics, you'll be able to, you'll be able to get the hang of it and start really figuring it out. All right. So I still think, it looks like we're still pretty strong on the queues. So let's buy some calls that expire today. Let's buy some calls, some 291 calls. So basically the stock's trading at 290.5 right now. We're going to buy a 291 call. All right, so first of all, bug log, you have to get like approved for options trading on Robinhood, which is very easy. But then you're gonna want to, oh shoot. All right, see this. All right, okay. So basically, once you're approved for options trading, you go to the stock or the equity or the index that you want to trade options on. So we just did Qs. Here, because I'm approved for options trading on Robinhood, I go to trade QQQ options. Now you're on this page. You can either buy or sell calls or puts. So since you're just starting out with options, or maybe you've traded options before, you just don't know how to on Robinhood. If you're just starting, all that I would recommend you do is buy and call puts. I wouldn't worry about selling any contracts. And then once you get the hang of buying calls and buying puts, that's when you can then start implementing some kind of different strategies as far as, maybe some spreads, maybe some, condors, some butterfly spreads here and there. There's all these different complicated things you can do, but your base like what you need to do to start is to just understand how to buy and call puts. So obviously, you buy a call if you think the stock is going up, you buy a put if you think it's going down. So it's actually the Qs have gone down since I bought that call. So now we're down 5%. It was just a small position, just $75. So we'll keep holding on to this for a little bit. Probably for about an hour or so. So let me know, bug log, in the chat if that helps, what else we can do to help you get ready to do some options trading. But I will say, again, if you're just starting options trading, I would not do it with any money you don't feel. Look, I'm down 9% or 8% on this options trade. Like if you bought a stock and we're down 9% on it, like that'd be a very bad week. I just did that in 5 minutes here on trading options. So very risky. I would not do it with any money you're not okay with losing. But we'll keep watching this. Let me know if that helps. Let me know if there are other questions about options I can help you with. Because I do think that options are something that a lot of people just don't get into because they're scary, which isn't a bad thing. Like probably for most people, it's better that they don't get into options. But I do think, okay, so you asked to buy and sell puts on Robinhood. So if we wanted to buy and sell puts, so you can sell puts here, but like, okay, let's go out a week now. If I wanted to, and what Robinhood does here is they actually make it pretty cool. So say I'm selling, if you're selling puts, you're bullish, right? You don't think the stock is going to get down. So I'm selling the 285 here. My max loss is $28,000 if the Qs keep going down. So, well, that's if they get down to zero. Obviously, the Qs aren't getting down to zero. But with that said, if you're selling, you need to have a certain amount of collateral just in your account to cover that trade. You can do spreads though but this is where I'm saying I don't even think you need to worry about this. This is what Robinhood makes it really cool is they have this expected profit and loss chart here that's really interactive that you can see okay, I'd make money on this spread if the Qs are below 285, but anything above 286, I'd be losing $20. That's actually not a bad spread, honestly. $20 to make 79 if the Qs get below 284. That's actually a decent risk reward. Now I was just making this to mess around. I'm not going to take that trade, but it is interesting. All right, yeah. So now look, guys, we're down large on our calls. Let's just cut our losses. Now you know what? I don't even know. I don't care. I don't even care enough about that enough to. All right, Bug. Well, let me know if that helps. Aaron Bryan saying I blew up my options account, basically YOLOing. That's just what happens. Shit, I've blown up. Shit. Look at my account. Sorry, I got this random call on my. Oh, it was a spam risk. I hate these spam risk calls. Look, guys, I was up, 20 racks on this Robinhood account and gave that all up over 3 months. Got another spike where my account went from $5,000 to 11 overnight. Gave up that, made it back, gave it up, made some back, gave it up. So I don't know. I'm still green all the time, up $3,000, but giving up a lot of those gains. AB, meet AB. I've already met AB, the other AB, Aaron Bryan. He's my homie. He's got cooler hair than I do though, so but all good. All good. All right, other stocks we're watching today. Let's check out how Tesla's doing. Tesla, to me, like, this is slightly problematic if you're a Tesla like investor slash trader. Just the fact that Tesla's kind of been showing some weakness even on the days where the markets are strong. Like the Qs are up more than 1% today, and Tesla is not up more than 1%. Tesla's flat. Buglog, AB, thanks. Once the call expires, what happens? So it's a great question. It's a great question, Buglog. So when you buy an options contract, you're buying a contract that allows you, if you're buying a call, you're buying a where's Tan today? He's asking. Tan's down on the Mansion News, but it's came back a lot. So it was down almost 7%. It's come up like 4% from its lows, but it's still down about 3%. So yeah, a lot of your solar names, your Sunruns. Whoa, that's not Sunrun. That's a crypto. Your Sunruns getting hammered down 9%. But anyway, back to Buglug's question: what happens when the contract expires? So if you have enough money like in your account, you can actually exercise your options contract. So it just in simple terms, say you have $100 calls on Apple. Apple's at 150. You get the right to buy 100 shares of Apple at $100. So you can actually exercise that option, but it's going to cost $10,000. I've never once in my life actually exercised an option. I just sell the contracts back before they expire for more than I bought them for, or less than I bought them for. But the plan is to sell them back for more than I bought them for. Now, what often ends up happening, especially for me, is that those options will expire worthless. So, for example, for the 291 call on the Qs that expires today in 3.5 hours, if the Qs aren't above 291, that contract is worthless. Because why would someone pay to buy a contract that they could buy the Qs at 291 when the Qs aren't even worth 291? So basically, Buglog, if you're just getting into options trading, don't think about the options expiring. You're trying to sell the contract back for more than you bought them for before they expire, or they're going to expire worthless. Because chances are and there are cases where like you would want the option, you would want to execute the option before it expires, in the sense like if you were selling puts on a stock that you didn't mind owning, like if I was selling $120 puts on Apple, saying, okay, I wouldn't mind owning Apple at $120. If Apple dips below 120 to close that position, you can buy 100 shares of Apple at that price. Boom, now your position is closed. So there are, kind of examples or situations to where someone would want to actually exercise that option. But for the most part, and what I do is I'm just trying to buy a contract and then sell it back to the market before it expires for more than I bought it for. So then I'm never worrying about actually exercising a contract or having enough money in my account to exercise an option. It's just pretty easy. How can one person dictate our national energy strategy? That's a great question, Mike. Right. My I guess argument to that would be it's like depending on how you like have the mental framework of it, because there are 100 senators. So there are 100 people dictating our national energy strategy. It's just because of the way all the other people fell. Now it's up to one who happens to be getting a lot of money from the coal industry. So he's not going to want to vote for the clean energy bill. He's getting paid from his West Virginia oil and gas and coal companies. So, so I think one person isn't dictating our national energy policy, but because of the other 99 people, now it is up to one person. And I don't know. I mean, West Virginia is probably one of the most top 10 irrelevant states out there. I don't think it's right either, but that's our system. That's what we have set up. That's federalism. Love it or hate it. Okie dokie. I do think we're ready for trivia. So if you guys are new to this, we're going to play some trivia. If you're watching on YouTube, I think most people are. You're going to want to put the number corresponding with the answer in the chat. Wait, let me ask my buddy. Let me ask my main man Ember if we're ready to go. Ember, we ready? Question. Oh, holy shit, we are ready. He already started the thing. All right, guys, are you ready? All right, so you put the number in, you don't put the answer in the YouTube chat. All right, history trivia. We're starting soon, and I'm gonna play, and I'm probably gonna beat you guys. So sorry about that. Alrighty. There we go. We got the music going now. All right, first question. One of the deadliest pandemics, the Spanish flu, killed off what percentage of the human world population at the time? Less than 1%, 6 to 10%, 3 to 6%, 1 to 3%. I'm gonna go 3 to 6 here. I feel like less than 1% is too small. I feel like, because you got to think back to, this was in like the early 20th century, like 1920. There were less people in the world, so 1% wouldn't be that much. They had worse medicine. I'm gonna say 3 to. It's either 3 or 4. Final guess, 3 or 4. 3. I was right. Let's freaking go. Straight after World War I. Let's see. It was like 1970. Yeah. Sure. Straight after World War I. All right, guys. Next question coming in 3 seconds. Which modern-day country is the region that was known as Phrygia in ancient times? I'm gonna go Syria. Yeah, Aaron and Brian saying the Black Plague was 1/3. That's even more than the Spanish flu. But again, you got to think back then. That was in like I don't even know, when was the Black Plague? Like the 1600s or something? Like there was even less people in the world, and medicine was probably non-existent, I'd guess. Turkey. Damn. All right. I said Syria. Was wrong on that. All right, guys. Let's get the participation up. We only had about 6 people participate in that last question. This next question will be better. I have a feeling. All right. Next question. Coming in 0 seconds. In what prison was Adolf Hitler held in 1924? What a fun question, Ember. I don't know. I know that's when he wrote the book, the Mein Kampf. I'm going to say 2. Too much delay, not counting. Oh, shoot. I put it in the wrong chat. I don't know. That sounds the most German. Was it a German prison or an Austrian prison? I don't even know. Aha! Got it. Let's go.
All right. Hello. I have joined.
A wild AT has appeared.
Hello. AT and AB back at it.
Back at it again with the white vans.
Do you even own a pair of white Vans?
Damn, Daniel. Back at it again with the white vans.
That was such a classic.
That was a classic. Was that a Vine?
That was a Vine.
Oh, man.
Could you imagine if that was a TikTok? Oh, my gosh.
Times were better.
What year was the United States Declaration of Independence signed? Was it 1777, 1776, 1775, or 1774?
I almost feel like this is a trick question, but I'm still going with 1776. Bonus points. Bonus points if you can name the year that the Constitution was ratified.
Well, bonus points if you can name the year Nicolas Cage stole the Declaration of Independence.
2004. Easy.
Well, damn.
Actually, I don't know if that's right. Somewhere around that time frame, though. So the first National Treasure came out.
All right. Well, I am low-key disappointed at the 1777 and 1775 answers. But all you that got 1776, well done. You did pay attention in 5th grade U.S. history, so good on you.
1981 was the ratification. Bonus points to Berlin, born to be free.
Nice, nice.
Shout out. All right, what is the bloodiest event in United States history in terms of casualties? September 11th,
Whoa.
Pearl Harbor, D-Day, or the Battle of Antietam?
These questions are so dark, Henry.
All right, so let's go through this. So D-Day, I don't know how many troops died on that. September 11th was about 3,000. Pearl Harbor, I doubt was that. But the Battle of Antietam sounds like, so like antebellum is like
Antietam?
is like Civil War. I'm going Civil War because you got to think about Civil War. You got both armies, Americans killing each other, so that's going to be the most casualties. Not just all the other three are just Americans being killed.
That does make sense, but
Let's
you were
go.
right. Nice. There you go. Okay.
I thought the battles at Gettysburg was like the deadliest. I don't know.
Well, we'll need a fact checker.
But yeah, that's why I would assume the deadliest battle would be a Civil War battle because it's, again, both armies, Americans.
Yeah. I mean, that was a good thought process, honestly. You did come to the right answer, so good on you.
Spencer leaving. Bloodiest event in U.S. history.
What was the unofficial name for Germany between 1919 and 1933? The Weimar Republic, Österreich, German Democratic Republic, or the Federal Republic of Germany?
I'm seeing some ones in the chat. I'm going to go one.
Democratic Republic? Isn't that contradictive?
No.
No?
No.
All right, I'm thinking
Because
something
republics
else.
are just multi-state. Like we have a republic because we have 50 states.
Wow.
But it's still a democratic republic. Supposedly, America is supposed to be. I don't know. Supposedly.
The Weimar Republic.
Yeah.
Nice. Good
Maybe
stuff.
Weimar because it's German.
Tiny Pie. Try again, maybe next year. I
Yeah,
don't
tiny
know.
pie, bro. I don't know what type of
Go read an almanac.
yeah. Go back to 3rd grade history, maybe.
All right, next question. I feel like it stays
Tiny
on
Pie
the,
said Guinness is older than our country. It's true.
probably.
Which of the following presidents of the United States was assassinated? All right. William McKinley, Lyndon Johnson, Franklin Roosevelt, Chester Arthur. Is Chester Arthur even a president?
Chester A. Arthur was a president. Yes.
I think it's McKinley. I think McKinley might have been the one that was only president for like a month before he got shot.
Tiny Pie. An almanac. You don't know what an almanac is?
Who was the president just for a month?
Well, I think it. So I'm gonna say William McKinley.
No, it was William Henry Harrison.
Okay.
He
well.
died just 31 days after inauguration. Shortest presidency in U.S. history.
Well, it was William McKinley.
Oh,
so
hell yeah.
there we go.
Oh my god, I'm on a roll right now. I was gonna offer a free piece of swag, but I don't think any of you guys are earning it today.
It's like he was gonna send it anyway.
True.
Wait, is the stream deck like not working? What the fuck? Oh wait, just turned on for a second. Hold on.
Might just be a power.
No, it's not connected. It's okay. It's all good.
Oh, Benzinga was the winner. Sorry about it.
Cheating.
All right, who was second
Who
place?
was second place?
Buglog, you can still get a piece of swag. Just email us shows.
Throw the banner up. Tell him where he needs to email and what he needs to do to claim this swag. Crickets. All right, email shows@benzinga.com. Let us know what size you are and your address, and we will send you swag.
Yeah, I'll give you two options. You can either get a hat or a t-shirt. If you want a t-shirt, you got to send me the size. If you want a hat, I think our hats are one size fits all. Benzinga's still gonna wait not 6 months to get swag. Probably. I mean, guys, look, there are a lot of supply chain issues going around across the world.
Actually,
right now.
yeah, it did take me like 3 days. When was Prime Day?
Prime Day was on Tuesday, I believe.
Okay, yeah, it took me 3 days to get my Prime Day package. So
I got this on Prime Day.
if that's any indication to supply chain issues right now, I don't know. You tell me.
New hydro flask water
Oh,
bottle.
AB, I gotta buy you that straw.
Oh
don't I?
yeah. You want to
Shoot.
tell? You want to
Yeah,
tell
yeah,
the
so-
team about what happened yesterday?
So I told AB, he's like, "Oh my gosh, I got this really cool like new hydro flask." I was like, "That's
I don't know if I
awesome," you
said
know?
that. It's a new hydro flask.
Yeah, whatever.
It's cool.
Yeah, it's cool. You know, and so I was like, you should get the sippy straw. It changes the hydro flask game. He's like, well, how much is that? I don't want to buy it. Will you buy it for me? Because like AB thinks that I'm just gonna buy everything for him. So I was like, you know what? Maybe I'll buy it for you. We're on the golf course and we're like, let's make it interesting. AB, if you beat me, or no, what was it? You got par on the
Yeah, I think
par
you said
three?
I had to par.
Yeah, you just had to par the par 3, and I told him I'd buy him this $12 fucking. Oh, sorry. I swear way too much on
Earmuffs.
this show. Yeah, I'm
Earmuffs.
sorry. But I told him I'd buy him this straw lid for his hydro flask, and hey,
A bet's a bet.
what'd you know?
I
He
parred.
hit par 3.
Yeah.
There you go. Good stuff, man.
That was fun. Yeah, we gotta golf again soon.
Yeah, of course.
Maybe sometime this weekend.
I think I might go to the range today. Going to Korean barbecue.
Ooh, Korean barbecue.
Yeah.
Sounds good. Today is Friday.
Today is Friday.
Today is Friday.
Friday. Wait, there's this one Friday song that I found like last year that got me so hype.
Oh, is it by Rebecca Black?
No, it wasn't that. It
Oh.
was the it's Friday now, then it's Saturday, Sunday, Monday, then it's Friday. You know?
Yeah.
You know that song?
Yo, straws are overrated unless you're drinking soda or something that stains your teeth. Straws create terrible wrinkles on your lips. over
Really?
time. Whoa.
What?
Yeah,
I
I
did
think
not
they're-
know that.
I think the reason people like the straws on the hydro flask is just because it's kind of a bitch to like
It's
unscrew.
insane.
and
I have
then you
gotten
fucking take
in-
a sip and then you gotta screw.
Listen, I've gotten
again.
in multiple arguments with my girlfriend where she is straight up yelling at me for tightening my hydro flask too tight. But it's not my fault. That's just product. That's the design. That's the product design,
How tight
right?
can you get it?
Like ridiculously tight, to a point where she's screaming at me, like, "Why are you tightening it this much?"
Is that the right email? It won't send to the email in the chat. Shows@benzinga.com.
Shows@benzinga.com.
Yeah, make sure you're
Bug log.
spelling Benzinga right.
BENZINGA.
And if that still doesn't work, you can just email me directly at aaronbree@benzinga.com. We'll throw that in the chat.
Yeah, he has the first name, last name. I got the first name.
No, you don't.
Yes, I do.
Oh, you took that? I thought we were gonna double. I thought we were gonna.
We can golf for it next week. You
All
wanna do
right.
that?
I like that.
All right. Stay tuned for that video where AB and I are out on the course. We're playing for the single name email handle. That'll be a fun one, actually.
Yeah, I would love to. I would love to just be Aaron@benzinga.com. To be honest with you.
Yeah, I got Aaron. But I do like typing out my name right before I put in my handle. Like, I feel like if I go just Aaron, I haven't typed enough. I don't. Weird thing that I think of.
All right, guys. So it is 12:53. We have about 7 minutes left of the show.
7 minutes left. That's 7 minutes of stocks and charts that AB can look at for you guys. So go ahead, drop those tickers in the chat. Let's look at some charts,
Oh, yeah.
see what's going on.
I forgot. I haven't checked in on my calls we bought live on the show.
Well, I just said we were looking at tickers.
Yeah.
Now you want to look at your calls?
Let's do it. Well, I bought the call. Aaron Bryan said one day he'll take it for both of us. Yeah, Aaron, I also saw
Netflix on a
Jason's-
tear.
Yeah, Netflix. Netflix had the news a couple days ago with Microsoft that Netflix is getting ready to put out a new advertising-based subscription. So essentially, like Hulu, will have like commercials and stuff. So where Netflix, I think that's gonna be. Whoa, holy shit! This is a crazy move for Netflix from 175 at 10 a.m. this morning all the way to 186.
Paul did say it's on a tear.
I wonder what the.
Our chat is pretty smart.
Yeah, I mean, look at these. Holy shit. Look at these calls. So this Netflix call was 31 cents this morning. Now it's worth $4. It's up more than 1,000%. So if you would have bought,
Absolutely not, Tiny Pie. Iron Condor option spread, please. No, I absolutely cannot. I'm a tech guy.
So, I mean, yeah, those are some. If you got into these if you got into these Netflix calls, kudos to you. Congrats. 'Cause those are it's just some fucking crazy movement. Holy cow! I'm FOMO on not having any Netflix buys today. Netflix calls. Who asked? Someone asked how long will this rally will continue. Who's to say? You know, could last a few weeks. Could last. Today could be the end of the rally.
Wait, Paul gave us Netflix. Told us to look at Netflix. Now he's telling us to look at Veru.
Veru.
Oh, another one.
Veru is an oncology biopharm company which engages in developing novel medicines.
They were talking about it on live trading, I think, the other day or something like that.
Yeah, I just honestly, dude, like never know what's going on with these biotech stocks, so I never like know how to trade them. But yeah, I mean, this one thing's.
I mean, we gave you 4 really cool biotech stocks today, right, on All Access.
That is true.
That is true. So I mean, if you guys missed that, definitely check that out in our channel. It's in the past uploads or whatever. But yeah, had 4 awesome companies on All Access. Talked about their, the reason why you should look out for them. If it interests you, check it out.
Hell yeah. Any other stocks seen in the chat? So the call...
just saw Veru. Wait, Luke's gonna give us a pick.
Hot stocks, Luke?
Hood.
Hood. We're looking at Hood on Hood. This is Hoodception right here. So Robinhood Markets trading at $8.29 a share. Luke, what's the thesis here?
I feel like the upstart guy.
Minervini.
Okay,
what does this company do?
All right. Here's the thesis on Hood. The stock is still not cheap from a fundamental perspective. There's no doubt about that. But how much worse can it get is the question. I guess. No, think about it. They already announced the layoffs, right? You already have the crypto winter is fully set in. We already have the data on the slowdown in account openings. MAUs already shrunk quarter over quarter. I think a lot of the bad news is out. And here's my like low key thesis on Hood. You ready for this one?
Yeah, I love low key theses.
Here's the low key thesis, and let's actually do some research on this one next week, producer AB.
Okay.
I'm not getting into the stock right now, but
okay.
It's on my research list. But here's the low key thesis: is you have Celsius, BlockFi, Voyager all ran into solvency issues, customer asset freezing issues. You know who didn't?
Robinhood.
The other one, Coinbase. Does this cause like the reverse GME effect? All right, remember GME happened and a lot of people left Robinhood and went to a Webull solution or to a TDA solution, etc. What are you doing with your crypto trading when Voyager is frozen? So that's like the low key thesis. Again, earnings are around the corner. I'm guessing they're about 2 weeks away, 3 weeks away. If I remember properly, I think Robinhood reports in the later half of earnings season.
August 3rd. Yep, you were correct.
Yeah, so they're later in earnings season. So next Thursday, let's make this our deep dive stuff, and I'll come ready with some research. Deal?
Hood on Thursday. All right, guys, it is 12:58. It is time for me to hand it over to Money Mitch.
12:58. I mean, that's 2 minutes. 2 minutes.
All right, fine.
Rapid fire. Come on.
Rapid fire.
All right. Well, you guys heard it here.
Wait, actually, okay. Also, anyone that's on FinTwit, there was an account the other day that was sharing this like research report that was comparing Netflix and Roku, Shopify, and some other company, and they were basically saying like the market is unfairly grouping these companies together. But I couldn't find the thread. So if anyone knows what I'm talking about, let me know, because I'd love to find that thread.
What thread?
It was some like investing Twitter account, and they had 6 stocks, and like basically 3 of them they liked, 3 of them they didn't like, but each one had like a pair. So it was like Roku and Netflix, and it was like the market is unfairly you know, grouping Netflix and Roku together, even though Netflix is actually a good company, but Roku's a bad company. And then I think it was like Square and PayPal were another one.
That'd be a good segment.
I know I couldn't find the tweet. I saw it and then I tried to find it and I couldn't find it.
Damn. Okay.
Paul's saying Netflix to 190 today. I mean, those calls will be up 2,000% if that happens. I actually remember during the COVID markets, one of the things that got me really into like, I got to figure out options trading was this Reddit post by this guy who bought Netflix calls at 3:30 p.m. on a day that expired that day. And he made like, I think he spent 10 grand on like the bet and made like 400,000 in like 30 minutes. And I was just like, holy shit. All right, I got to figure out how to do this.
Oh my gosh. Yeah, I have a friend who, and I heard you saying it earlier, don't trade options with money that you're not willing to lose. And prime example, I have a buddy of mine who is trading options, and you know, when you're trading options and you're up, you're feeling all good and everything, but man, he went up and he is
Oh wait, this
all
is your
the way
buddy
down.
that's been like
Yeah. I told you the story. I'm not gonna out him.
Yeah.
He's an anonymous guy at the moment, but yeah, man, do your research.
No, okay.
Only-
If you've watched Squid Game and you wonder how,
Oh my
how
god,
do these people,
he would be the perfect candidate.
right? Like how do these people get to this point where they're so desperate that they're willing to like bet their whole
Holy.
life? Options trading.
Options
that's how,
trading.
That's how people get that desperate. So don't do it unless you're, you know, willing to lose a lot of money.
We should do something next week where we go through prominent options traders and we make the decision, oh, they're probably going to end up on the Squid Games, or they're not going to end up.
Yeah,
on
the guy
Squid
from Archegos.
Yeah.
Definitely on season 2 of Squid Game. You're gonna see that guy.
Games.
Straws
When-
make
when
you
is
look
that-
tough.
is
Is
that
that from SpongeBob?
What?
Straws make you look tough.
Straws make you look tough? I don't know.
Like the SpongeBob movie when they're at the weenie hut. I think that's
they never talked about straws.
a-
I remember the burger car and the spatula key.
But what was
and-
the thing about like looking tough?
That was the Weenie Hut Jr. What was it? It was like, I eat nails for breakfast
Yeah.
without milk. Oh shit.
Mustaches.
Yes, mustaches. That was it. Yep. Nice. Awesome.
Say something tough and drink through a straw. All right, that's fair. Like if you're like
I imagine that you're like, F you. Like trying to reach for the straw and stuff. Oh man.
All right, guys, that'll be a wrap for us
That was it.
today for the week. We'll be back on Monday with more Benzinga Live. No one knew the Twitter thread I was talking about, so I'm just gonna spend my afternoon looking for
Yeah,
that.
we'll bug you guys on Monday about this, which means we'll see you on Monday. All right, peace and love, y'all. You guys are going to Money Mitch. Enjoy. We'll see you guys later. Stop that. End the stream.